Hi, welcome to Absolutely Forex, your free foreign exchange trading guide, book and magazine download site. This is video 4 of a 5-part video series on how to make money in foreign exchange. In this video we wanted to discuss a little bit about volatility and news and why volatility is important for you. In 2008 the market became extremely volatile. As everybody knows, the stock market collapsed, economic factors were moving around the world and the credit market was collapsing. What happened was, in the euro for example, volatility went from 5, 6, 7, 8% up to 25, 26%, even slightly higher. So the average daily range moved from 80 points a day up to 250 points a day. So your trading strategy had to take into account the ability of the market to move, and not just 1 day, 2 days, or 3 days, because we saw the euro move from 160 to 125. So you had to take into account the fact that over 3 days the market could move 600 or 700 points against you if you just held the one position. So when you start developing your trading system, one part has to be the technical aspect, whether that be moving averages or Elliott wave or Bollinger Bands or technical patterns in candlesticks or any of the other ways to calculate the technical nature of the market. But the second thing you have to incorporate into your strategy is the volatility. How much can the market move? Because that's going to affect how far away your stop loss needs to be and how far your take profit needs to be. So the more volatile the market is, the more carefully you have to calculate your support and resistance areas, and you have to calculate where you should be entering the market and how far away that stop loss should be. And then you have to figure out the leverage that you should be using so that it doesn't destroy your account if your stop loss is too far away. So as we've mentioned before, most professional traders look for a 2% or even less risk on every trade they make so that they can keep coming back participating in the market. And that's what we're suggesting for you, even at a retail type level, a $10,000 account. Don't put too much risk into any one trade, or try not to add to losing positions, because if anything happens as such as a news event or anything like that, or volatility keeps increasing, you're in serious danger of blowing up your account. So always look for that 1 week volatility. You can get it from your broker. They'll be quoting options and you just need to ask for the 1 week euro volatility and they'll tell you what it is, and then you can get an understanding of how volatile the actual market itself or the market participants think for the weekly euro range to be. The next thing you have to take into account, which is a little bit of an X factor, is news. So on Sunday night you need to print out the economic calendar and circle all the major events, GDP, IFO, if there's any FOMC testimony, non-farm payrolls, anything that's a major number, because you're going to have to incorporate that into your trades. Now it's easy if you have a position that's 100 points in the money going into non-farm payrolls, because you have a substantial buffer or time to be able to adjust your position if need be. But if your position is down 40, 50, 60, 70 points, then you have a decision to make ahead of the number, because after the number there may not be enough liquidity for you to exit where you want to exit. So this is another factor that comes into developing a winning system in foreign exchange. It's learning how to use the moving averages or the MACD or any of the other more advanced trading methodologies, the Elliott waves, the turtles, whatever that is. Incorporating that into how much leverage you use in each trade and how you control your account, combined with the volatility, which is a measure of how far the market can move or what the market participants expect the market to move. And then you're incorporating this X factor, which is the news factor, which can drive the market up and the market down very quickly. And if you have a tight stop loss, it can trigger it, or you can take advantage of the news by adding to your winning positions to make more money to help your trading account grow as quickly as it can, given the parameters that you've set for its success or its failure. So with that, I'd like to close video 4 and welcome you to video 5, where you'll be getting a summary, and I'll describe each of our 5 videos and the things to look for. Thank you.